it is the EBITDA margins, the core EBITDA margin number, which is perhaps better than what the street was estimating. So no major surprises in this quarter's numbers. Just going through a couple of the key internals. Remember, the auto segment for M&M has been doing very well because of the strong growth that we've seen in the SUV segment, right? So I'm going through the auto segment numbers. The margins for autos are almost at double digits now. 9.5% EBIT margin is what the company has clocked in on the auto segment, and this is on a base of almost 19,000 crores of revenues. This is purely for the auto segment I'm talking about. The farm equipment segment as well, more details are out. Now, the farm equipment margins this time around have come in at 18.5%, which is a very healthy growth coming in the farm equipment segment. So good operational performance is what the company has seen. Margins at 14.9% versus a pole of 13.8%. In the auto segment as well, you have, a lot of things that are working in favor of the company. Of course, the SUV segment is picking up with a big pace. Raw material prices have cooled off. They've in fact managed to pass on higher raw material prices as well to consumers. Ashwin Patil is joining in. He's a senior research analyst at LKP Securities. Ashwin, thanks a lot for joining in. These look like a decent set of numbers from M&M. Your thoughts first up on the numbers, and what would your view be on the stock now?
Well, the numbers have come quite, slightly better than our expectations, because the margins, they have outperformed themselves what they had reported earlier, especially on the farm equipment segment. And on the auto segment, I would say that, 9.5 is a decent set of numbers, decent margins, but I would say that, still that double digit is not yet reached, but definitely, I think that with good volume performance going forward, that can also be reached in Q2 or Q3. But on the farm segment, I would say that good monsoon has, we have seen a good monsoon performance till date. And going forward also, if it remains so, then farm equipment numbers can also, better their earlier performance. And on the margin front also, we can even better margins on that segment. So going forward, see, the numbers were quite decent on the profitability front. But going forward, I think we need to wait and watch how the raw material pricing goes going forward, and how the margins perform. And definitely, I would say that the volumes will be better than now, considering good monsoons and also the festive season coming up. But the profitability needs to be monitored, considering slightly inching up raw material prices.
Okay, got that. If you look at the segment-wise performance, right, both autos and the tractor segment have seen an improvement in margins. So auto segment margins have actually gone up 130 basis points year on year at 9.5%. And the tractor segment margins have also improved 100 basis points year on year, coming in at 18.4% versus 17.4%. So looking pretty decent over there. Ashwin, I wanted your thoughts on the stock itself, because yes, these numbers are good, but as Prakash was saying, going forward, given the kind of returns that the stock has already given, it looks a bit tough for it to build on to its gains further. Would you concur with that view? And at this price, yes, 29.20, how does the risk reward look, Ashwin?
Yes, even I think that there will be some sort of consolidation in the stock price, given that such a fabulous rally that the stock has over the past 1 year. So from these levels, I mean, we need to see whether there is a serious upside from here. But you never know. I mean, the stock has been surprising us over the past few quarters as well. And going forward, maybe the stock can give us maybe like a 5 to 7% kind of upside from these levels. So maybe putting a buy at these levels will be challenging.
Okay, putting a buy at these levels is challenging. I just wanted some thoughts on the auto segment. You were talking about how they haven't managed to get to double-digit margins just yet in the auto segment. 9.5%, but that's still a 130 basis points year-on-year jump in their auto segment margins. Ashwin, any levers to improve their margins further, and what are you looking at? What are you penciling in terms of full-year margins for the company? Currently, they exited Q1 at about 15% margins. In both the segments cumulatively. At the end of the full year, what are you looking at? Would you change your estimates at all?
or higher than average of last year, etc. Maybe like 106%. That's what the Met Department is predicting. If that happens, the tractor sales would definitely go up, and with that, I think there'll be some levers on the FES side. But for the auto side, I think reaching 10.5% kind of margins this year will be slightly difficult, considering the RM prices, which may move up going forward. Because we don't have a clear view on that, but that can be one of the headwinds for the auto segment margins going forward.
Okay. The tractor segment market share has actually gone up. So if you look at it, the market share in the tractor segment has gone up 180 basis points in Q1 at 44.7%. They are also the number one in the electric three-wheeler segment with market share at 43.4%. And in the SUV segment, the market share has gone up by 130 basis points year on year at 21.6%. So across both the tractor as well as the SUV segment, the market share of M&M has increased, which is another positive for the company. And hence, that's the reason why you're seeing the stock move up to the high point of trade as well. So thanks a lot, gentlemen, for joining in and helping us analyze these numbers. Decent set of numbers. Strong operational performance continues. Market share has improved across key segments like tractors and the SUV space. And the top line growth as well, double digits coming in for key segments like the auto space, hence at the high point of trade currently.
That's right, Sonia. In fact, the market has really taken cognizance of the profitability and the beat that it has shown in EBITDA and EBITDA margins. With that, we'll slip into a short breather. But remember, up next, Hamas chief was killed in Iran.